Today, we're diving into Robinhood's latest developments, launching tokenized U.S. stocks and ETFs for European users, and building its own blockchain to reshape trading. But before we dig in, quick favor. Did you know a lot of you listening aren't following us yet? If you like the show, please do hit that follow or subscribe button wherever you get your podcasts. It really helps us keep the show going. Thanks, folks. Okay, so Robinhood. We're going deep today. Our mission, as always, is to cut through the noise, pull out the really important stuff from the sources, and give you a shortcut to understanding what's going on. And the big question we're tackling is, how could these innovations, genuinely transform investing? Could they pave the way for more flexible, truly global markets? Okay, let's unpack this. First off, let's maybe set the stage a little. Who is Robinhood again? Just a quick refresher.
Right. So Robinhood, founded back in 2013, they really made a name for themselves with commission-free trading.
Yeah, they kind of blew things open, especially for younger investors, right? Stocks, ETFs, crypto.
Exactly. Made it super accessible. And they've grown massively. We're talking almost 26 million funded customers now.
Wow.
Yeah, and holding something like, 210 billion in assets? It's huge.
That's incredible scale. Now, they've had their, let's say, bumps in the road, some controversies.
No, definitely. They've navigated some tricky waters.
But they seem to be back, pushing the envelope again as a fintech innovator.
Absolutely. Which brings us to the big news, this launch of tokenized U.S. stocks and ETFs for European users.
Yeah, this feels different, not just a small update. It seems foundational.
It really does. And what's fascinating is the scope and honestly the speed. This isn't some tiny pilot program. Right out of the gate, it's commission-free, 245 trading, almost 247, 5 days a week, for now on over 200 major U.S. stocks and ETFs.
200, so we're talking the big names.
Oh, yeah. Your Apples, Microsofts, NVIDIAs, the ones people really want access to, all available as tokens on a blockchain.
And maybe just quickly explain ETFs for anyone less familiar.
Good point. ETFs, exchange-traded funds. Think of them like a basket of investment stocks, maybe bonds all bundled together, but they trade just like a single stock. Great for diversification.
Got it. So these tokens, how does that actually work? What's the tech?
Okay, so currently they're using Arbitrum. It's a well-known Ethereum Layer 2.
Layer 2, like an express lane for Ethereum. Makes it faster, cheaper.
Precisely. Ethereum itself can get congested and expensive, so Layer 2s like Arbitrum handle transactions off the main chain, making it viable for this kind of high-volume trading.
But they're not stopping there, are they? I read something about their own plans.
Exactly. This is the really strategic part. Robinhood's announced they are developing their own Layer 2 blockchain.
Ah, okay. So they want to control the tech stack themselves.
That's the long-term play, yeah. It gives them control over features, scalability, costs down the line, and probably helps navigate the complex regulatory stuff on their own terms.
Makes sense. And this isn't just stocks, right? They're doing more in crypto, too.
Yeah, it's broader than just tokenized stocks. For EU users, they've rolled out crypto perpetual futures with leverage.
Okay, more advanced trading stuff there, higher risk, potentially higher reward.
Definitely. And for US users, they've added staking for Ethereum and Solana, basically earning rewards for helping secure the network with your crypto.
So it's a whole strategy integrating traditional assets in crypto.
Absolutely. It's multifaceted.
Yeah.
And they're not done. They're talking about expanding the tokenized stock list to thousands by year end.
Wow.
And eventually aiming for true 24/7 trading. That would be, revolutionary.
That 24/7 idea really hits home. So, okay, let's pivot to the why should you care part for our listeners. Beyond the tech talk, what's the immediate benefit? What are the bigger ripple effects here? I mean, the immediate thing seems pretty clear, making global stocks, U.S. stocks especially, way more accessible for people in Europe.
Right. That near round-the-clock commission-free trading of U.S. assets, that's a game changer, removing those old geographical and time barriers. And if you step back, look at the bigger picture. Robinhood is really leading the charge here. They're not just dipping a toe in. They're actively integrating traditional finance, TradFi, with blockchain.
So it signals a bigger shift towards tokenization.
I think so, yeah. A significant, maybe even irreversible shift towards a more tokenized financial system. It legitimizes the whole concept of tokenizing real-world assets when a player this big does it at scale.
And that could have knock-on effects.
Huge potential ripple effects. It could accelerate adoption across the board. Other brokers, banks, they'll have to look at this and think, okay, maybe we need to do this too.
Puts pressure on them.
Exactly. And it could even push regulators to, catch up faster, create clearer frameworks because the industry leaders are essentially setting the standard.
Right. Setting a precedent, like you said. Okay, let's drill down even more. Real-world use cases. If I'm an investor in, say, Germany or France, how does this change my actual experience? What can I do now?
Okay, good question. For that EU investor, the advantages are pretty concrete. Buying and selling U.S. stocks and ETFs as tokens, it brings several key things. First, instant settlement. Forget waiting T+2 days for your trade to clear. On the blockchain, it's near instant. That frees up your capital faster.
Less risk tied up in settlement, too.
Right. Second, fractional ownership. You want to own some NVIDIA, but maybe a whole share is too pricey. Now you can buy, say, 10 euros worth. Lowers the barrier, helps diversification, especially for smaller portfolios.
That's huge for accessibility.
Definitely. And critically, you're bypassing a lot of the traditional market hours and, frankly, some of the intermediaries that add costs and delays. Blockchain doesn't sleep.
So fewer middlemen, potentially lower friction.
That's the idea. Even though Robinhood is the platform, the underlying blockchain transaction can be more direct. Plus, you mentioned crypto futures and staking earlier. That just broadens the toolkit for retail traders, again, with lower barriers than traditional routes often have.
And all wrapped up in that user-friendly Robinhood interface they're known for.
Exactly. That zero commission, easy-to-use platform continues to be their hook, attracting first-timers and people who just want everything traditional crypto in one place.
So it's breaking down walls, geographic, time, cost. Okay, makes sense from the user side. Now, going back to the tech, you mentioned Arbitrum now, but they're building their own thing. Who are they partnering with on this stuff? And what's the logic behind building versus just using existing tech?
Right. This raises that important question about scale and ambition. So, yes, Arbitrum is the current foundation, fast, cost-effective, built on Ethereum security, essential for handling the volume.
But building their own layer too. Why take that on? It sounds like a massive project.
It is, but it's about control and customization. By building their own, they can tailor it precisely for financial assets. Think specific features for compliance, for tokenizing different kinds of real-world assets beyond stocks.
So it gives them more flexibility long-term.
Exactly, and potentially better scalability as they aim for thousands of assets and 247 trading. Plus, maybe lower operational costs eventually, not being reliant on Arbitrum's fee structure, for instance.
Okay. And partnerships. They can't do this alone, surely.
No, definitely not. They're leveraging key partnerships. You see names like Bitstamp mentioned, a major crypto exchange, likely for liquidity and crypto services, and WonderFi, a Canadian digital asset company.
So they're pulling in expertise and infrastructure from the crypto world.
Correct. It provides regulatory cover in some areas, infrastructure support, liquidity, all crucial for this kind of global rollout.
Yeah.
And the scale they're aiming for is just vast, over 400 million people across 30 EU and EEA countries.
That's a massive target market. Huge ambition. Okay, it sounds incredibly ambitious, but with ambition comes risk, right? Every bold move has hurdles. What are the main challenges or concerns you see for Robinhood here?
Yeah, you're absolutely right to ask that. The number one risk, I'd say the biggest unknown, is regulation.
Always the elephant in the room with crypto and tokenization.
Always. The rules around tokenized securities, crypto derivatives, they're still being written, and they vary hugely from country to country. Robinhood's wading into uncharted territory across dozens of jurisdictions simultaneously.
So just figuring out how these things are classified, security, commodities, something else.
Exactly. And the rules that apply change depending on that classification. It's a complex legal maze. Then there are the operational challenges.
Like what?
Well, things like custody. How do you securely hold and manage these digital tokens representing stocks? It's different from traditional share ownership. Ensuring there's enough liquidity buyers and sellers for smooth trading, especially for less common tokens.
Where you don't want people stuck unable to sell.
Precisely. And even price discovery, how the market determines the fair price. It might work differently than on established stock exchanges. These aren't trivial problems.
And Robinhood's own history, does that play a role?
It could, yeah. We have to remember the past platform outages, especially during volatile times, and the regulatory scrutiny they've faced. Building and maintaining user trust is paramount, especially when you're asking them to embrace new technology like this. Reliability is key.
That's a good reality check on the potential pitfalls. So pulling it all together, what's the big picture for Robinhood's strategy going forward? What's the next major milestone we should expect?
Well, they've been pretty clear about the immediate roadmap. First, expect that rapid expansion of tokenized stocks and ETFs, getting to those thousands of assets they mentioned.
Okay, more choice.
Yep, and pushing towards that 247 trading goal. That's a big technical and operational lift, but it's clearly the vision.
And their own blockchain.
Critically, yes. The launch and implementation of their own layer 2, that feels like the linchpin for the next phase, powering all this tokenization, maybe even moving beyond stocks and ETFs eventually into other real-world assets.
So the overall theme is Deeper integration, more global reach.
Absolutely. Continued global growth, relentless innovation, blurring those trad for crypto lines, and just embedding blockchain deeper into the retail investing experience. They're definitely betting big on this future.
Okay, so to wrap up our deep dive today, Robinhood's latest moves, the tokenized assets in Europe, building their own blockchain, it's undeniably a bold play, a really strategic step towards tokenized everything, continuous markets.
Yeah, they're clearly trying to bridge that gap between legacy finance and the crypto world in a very fundamental way. And while, as we discussed, they face some serious hurdles, regulatory, operational, if they pull this off, if they execute this vision successfully.
Yeah, and what?
Then they could genuinely reshape retail investing globally. It could fundamentally change market access and solidify Robinhood as a key architect of next-gen fintech. It sets a new bar.
It really does feel like we're watching a potential shift in real time. So here's a final thought for you, our listener, to chew on. Given these kinds of developments, we're talking commission-free, nearly 24/7, fractional ownership, global access, all powered by blockchain. How sustainable are the old ways? How much longer can traditional market structures with their limited hours, geographic silos, and layers of intermediaries really stay the dominant model? And maybe more personally, what could this shift mean for your own investment strategies and opportunities in the years ahead? Thanks for joining us on this deep dive into Robinhood's tokenized future. We'll catch you next time.